A small problem like resistance to change can cause a company to fail. Every company has potential. So you want to be able to overcome any resistance to change. You really need to look at companies or organizations as complex systems.
Welcome to Business Model Hackers. We're happy to be back. This is a podcast where we unravel the complexities of business strategy and management tools. And we have Schreim here with us, a former top-tier management consultant who traded the security of a lucrative career for the dynamic world of entrepreneurship, and this podcast is part of that journey. You should know about Sam that he has advised everyone from Fortune 500 companies to ambitious startups, and he's extended that expertise to governments and nonprofits in strategic and management roles as well. So gear up, because we're about to get into it. Sam, you're here for another one. How you doing?
Good. How are you today, Philip?
Same. Feeling good, doing good. I'm pretty stoked about what we're going to talk about today. This idea of the butterfly effect and how small changes can lead to these big opportunities. And I think it makes the most sense to just kick it off with asking, what is the butterfly effect and how does that relate to business and optionality?
I'm sure, everybody's heard of the butterfly effect, which is butterfly flipping its wings in Brazil can, over time, through a complex system, create a tornado or hurricane in Texas. I mean, there's a whole book about it, a famous paper that was published around the subject. But the idea is that small changes can lead to large, unpredictable consequences in a complex system. It's not in a linear system, mainly in a complex system. The reason this applies to business is because in my previous episode, we spoke about optionality, and I mentioned how businesses by themselves are made up of fractal units themselves, and they are complex systems in a sense. Whenever we intervene in business, usually we identify that these big problems companies experience that they hired us to solve are usually caused by something usually very small, or at least started small. It became big because it wasn't really tackled when it was supposed to be tackled at the early stages. So it's almost think about it like cancer, then it spread out and became something big. I think this is more or less the connection between what the butterfly effect is and how that, why we are using this terminology here in business. And for examples, so how sometimes, a person trading in a bank in Singapore or in Asia, blew up a bank through his trades, right? Or a bank that's 100 years old. And all of these examples are examples of, how we're kind of analyzing or metaphorically comparing a problem in a business to the butterfly effect causing a tornado or a hurricane in Texas.
And now with the butterfly effect itself leading to opportunities, big opportunities, do you have any examples of small changes that have occurred for a business that led to significant growth or opportunity?
I mentioned the negative earlier, right? Like sometimes a small problem like resistance to change by a group of individuals can cause a company to fail, right? That's like the negative metaphor. It can also be a positive, like you would have interference from a butterfly, that's a butterfly effect, or you can have a synergy or a positive feedback loop. This is like, for example, how John Deere invested in data analytics to initially help farmers. It was a very small project that turned out to be something big for the company, right? I mean, that's like one example. The other example, if you want, I don't know if you're familiar with Twitter and how it started, but Twitter started as it was a company to support a podcast. It started as a messaging service. In 2005, the co-founder Jack Dorsey, they had this podcasting company, and they began like the side project called Twitter, not spelled the way it was spelled as Twitter. Initial idea was creating an SMS-based platform that would allow users to share short status updates with a small group of people. At the time, I think they were struggling to gain traction, and the podcasting was big back then, and there was a lot of competition, and so they were trying to figure out a way to pivot towards a new company. When this messaging app gained momentum, they actually realized that such a simple, status sharing app can have big potential, right? And they created this platform, what you have, nowadays as Twitter, So that's another, positive impact of, how a small thing that they did as part of the big project they created, this little thing, this messaging, SMS messaging, and now became a multi-billion-dollar company.
I mean, that's a perfect example. I couldn't even imagine a better example than that one. Thank you for sharing that. I honestly don't know how I'd never knew that. That's a really powerful story there. Now, with that said, how could a business actually take that and identify potential butterfly effects in their own industries or markets? Is that even possible?
It's not only possible, it's these days, it's a must. One of the things to do is you need to keep an eye and keep monitoring the industry trends and disruptive technologies, right? And why would you do that? If we're talking in the negative sense, obviously, because they may take your business down easily. Disruptive forces these days is known to have taken down big businesses that haven't been prepared or haven't addressed them early on. But I think more importantly, in my context, or at least in the business model hacking context, is you have to do that in order to take advantage of the positive synergies that you can create and the positive opportunities that this can create. So you can do that through that, if you want, the monitoring of any kind of new tech, see how that applies into your business and how that can create new opportunities for you, big opportunities. So through optionalities. The other way to do that is you can conduct an internal assessment of your NFUs, their natural fractal units or business units. So you conduct the business unit analysis and see if you have already products that have gained traction that may be hidden in your customer segments or in your value chain or anywhere within your business that you may not have known had potential. That is what we call is every company has potential, and most likely than not, you probably have somewhere within your existing business model some hidden gems that you are not aware of. And doing this analysis allows you to determine that. The next step would be, when you're doing that, also the next step would be to engage customer and seek feedback on these. On your ideas, they have any unmet needs or pain points. So usually it's not the best approach, but it is an approach that is cheap and at no cost to use. It's available, and sometimes it does lead to ideas. And lastly, I think it's always encourage your team, right, to share ideas and observations about potential opportunity.
And then what can someone do to actually capitalize in terms of steps they could take from these small changes to turn them into big opportunities?
There are several ways. If you're a small company, I think you need to, small or large, by the way, you need to foster a culture of experimentation and, of course, at calculated risk, right? Well, another way to do that is maybe establish a formal organization, a lab or innovation type incubator type arm or team or unit within your organization, similar to how Google X does it or Coca-Cola's The Bridge, so there is also Basecamps if you want to go smaller companies. Basecamps has a lab. I don't know if you're familiar with Basecamp. It's a small startup. You also have How It Lives Innovation Lab. So this is the kind of setup you can do as well, to foster this kind of opportunities, let's say, or turn small experiments into opportunities. You can also allocate resources to explore promising opportunities that you've identified through the NFU analysis that we mentioned earlier. I think more importantly, you need to be not only willing, but able to pivot and adapt your business model as needed. Right? I mean, unless there is a resistance to change. So you want to be able to overcome any resistance to change within the organization from the top down. And lastly, if you don't have the capabilities in-house, I think you need to either develop strategic partnerships or conduct some acquisitions to help you build those capabilities, because you need to move fast on these opportunities.
Interesting. Then the idea of the butterfly effect really does challenge a lot of notions in business. And in particular, I'd love to hear your thoughts on how the butterfly effect challenges the old school or traditional notions of cause and effect in the business world.
I think, one of the core concepts here is that the butterfly effect highlights the complexity and the interconnectedness of businesses, right? That they're systems, complex systems. I think that's one of the core things, right? People don't always see businesses as a system, right? And the idea is that when they're systems, the outcomes are not always proportional to the inputs, right? The output that comes out of it. So your input may be small, but the outcome, because it's a connected system, is always big. Impact on sales, valuation, even maybe taking companies out of existence, they can bring companies to bankruptcies. And the best way to solve the problem is to prevent or identify these issues at their earliest stages, right? Before they spread. I've always said that the best way to solve a problem is not to have a problem, right? But it's not always possible not to have a problem. You can put all the checks and balances in place and do risk mitigation and all that kind of stuff, but that's not always feasible because there are known unknowns and there are unknowns, right? Those unknowns happen. When they happen, all you need to do at that stage is detect them at their earliest stage, not when they've already transpired across the organization and created this big output that you're not expecting. It emphasizes this the ability of nonlinear thinking, right? And embracing uncertainty. So that's something, because we're all linear thinkers. It's very difficult to be nonlinear thinker. But when you identify that you have an nonlinear problem, you think differently. At least you force yourself to think differently. And that's one of the core aspects I think the butterfly effect can, help tackle.
Yeah. And I'm curious, in your own experience, what are some common obstacles that have prevented businesses from recognizing or acting on these small changes?
Oh, I mean, the most common and obvious one is always resistance to change, right? And people feel comfortable with the status quo. Then the other one is basically lack of allocating the right resources, or maybe even willingness to invest in uncertain opportunity, because it's uncertain, right? In a nonlinear system, you don't know if this particular opportunity has a potential. So the idea of that this is uncertain, so almost people may see it as gambling. Well, it's not quite gambling, but it is. You're betting on the uncertain, right? In traditional and linear thinking business, you only put your money where you're absolutely certain you're going to sell. And where is that usually? You think, if I invest in my existing product, which is already selling, it's going to do better, right? So challenging that kind of thinking and going into, okay, I know I have to bet on the unknown, on this potential, right? That could hit it big. That is another showstopper. Public companies, there's an overemphasis, unless of course you're a $1 trillion company, there's an overemphasis on short-term results and risk avoidance. So if you miss your target in one quarter, investors want to see that you've done something to fix that. And then short-term, they don't want to see you investing in a 10-year horizon products that are going to materialize in, 10 years or 5 years or even 3 years. They want to see something quarter to quarter. Those are, I think, the core, I would say, the 80-20 rules. These are the 20% that really have 80% of the, or 80% of the problems.
Now, you mentioned culture earlier and how that played a role in this idea. How can leaders foster a culture? Okay, where do they even start to encourage employees to spot and act on potential butterfly effects?
Yeah, I mean, culture is a very difficult thing to change, right? I mean, the thing is, what you need to do is you need to have that embedded in your values of the values of the company, right? If you want to, let's say you want to encourage curiosity, learning, exploration, or let's say you want to provide autonomy and support for employees to pursue new ideas, right? This stuff needs to be embedded in the culture, but it cannot be embedded in culture unless it's like in your vision statement and your mission, your values, the purpose of the company, and you really, follow them. That is at least essential to make it happen at the core. It has to be at the core and embedded in the DNA of the company in order for culture to be implemented.
I see. Yeah, like some kind of weekly stand-up where everyone votes on the thing that everyone's welcome for extra credit or, whatever. So some kind of thing that involves the team. It doesn't have to be every week. It could be once a month. We're all gonna, the best idea wins kind of culture. This is what you're referring to?
Yeah, exactly. So people think, it's easy to shift cultures in a company, but usually cultures are embedded and sometimes they're homegrown and they emerge out of a company if you don't have it it embedded in your DNA, like in your recruitment process and everything, right? And from recruiting to making sure that's part of your performance appraisal everywhere, right? That you evaluate people against those set of values that you put in your culture or in your DNA and your charter, then it's not possible to change cultures from point A to point B, from go where you are today to become a more innovative company, let's say.
Now then, what role does technology in particular play in impacting and amplifying the small changes in today's business environment?
Yeah, I mean, there are positives and negatives. I like the positives, right? The one positive is the fact that, it enables rapid, let's say, scaling, right? It allows you to achieve global reach very quickly. That's something that's wasn't feasible maybe 10, 15 years ago. Also, it allows you to collect data very quickly. So also something not feasible in the past, right? You had to run surveys and a lot of things, but now you can get data almost real time. The negative is the fact that it actually lowers barrier to entry, right? So you have a lot of small players now being able to disrupt established businesses, or even if you have an idea that works, that there is a low barrier to entry, your idea may not really achieve its potential because you're going to get a lot of competitors very quickly.
So then in terms of things that people can take away as we begin to close things out, what would you say are the things that you want people to walk away from this episode with, no matter what?
Right. I mean, the things we touch on clearly, companies are non-linear systems. I think that's the number one. It's like we really need to look at companies or organizations as complex systems. And if you recognize that, I think a lot of things will follow. You can basically argue that companies, and I've shown that in another episode, how their companies are fractal-like, right? Every fractal has a feedback loop. Right? The company or the firm itself is the sum of all these fractal units and the performance of these fractals. In fact, if you look at the stock market, the value of the stocks, if you take away all the market hypes and stuff like that, we've mentioned in another episode that stock markets have fractal-like properties, right? So if stock markets have fractal-like properties, then stocks themselves have fractal-like properties. So if you take out all the hype from the value of a stock, and all the market forces and GDP and all that kind of stuff, like market sentiments, not the actual fundamentals, you will find that the value of a company is driven by the individual components of a company that are also in themselves are fractal-like, right? They have fractal properties, be it we're looking at individual product groups or business units, or we're looking at how a team is performing. All of these are, have fractal-like properties. If they all work and are synergetic, they produce a positive feedback loop and you get a higher valuation over time, right? If there is interference, the stock drops. I think that's the key takeaway, that you have to, if you consider that in a company, and you start thinking holistically about a company and an organization, then your whole thinking changes and you start embracing innovation and you start embracing creating new opportunities that can have the butterfly effect.
I think that about does it for today's conversation. Truly laid it down for us here. Again, thank you, Sam, as always, for giving us your wisdom and experience. And to the listeners out there, thank you so much for tuning in to Business Model Hackers. I hope that you remember, as we always try to remind you here, that we go far more in depth on these concepts in resources that we offer to anyone who subscribed and went that extra mile. We go the extra mile right back. So please go to businessmodelhackers.com and subscribe, and you should get access to these resources that go way more in depth than we could possibly do on a podcast here. And also, please subscribe to our social media channels as well and help us continue to build this community so we can continue to do this kind of work for you. All of it helps, and we're grateful for all of it. Thank you, and until next time.